The Turkish Central Bank is teaming up with researchers to study the potential benefits of a shift towards electronic money. The new payment will be a version of the Turkish lira that's only available digitally. That means there'll be no need to print banknotes or mint coins. As cryptocurrencies become more popular, the world's central banks have realised they need to provide an alternative. And Turkey joins a growing number of countries that are exploring digital currencies. Paolo Montecillo reports.
Turkey wants to be the new kid on the blockchain. Its central bank is expanding a project to study the use of digital currencies in the country. Replacing notes and coins with cloud-based cash is expected to make buying and selling easier, cheaper, and more secure. There are similar efforts underway in places like China, India, Indonesia, and the US.
This is something we're investing time and labor in right across the Federal Reserve System. You may know that the Federal Reserve Bank of Boston has a partnership with MIT looking at one particular thing.
The Turkish move involves partnerships with institutions like the Scientific and Technological Research Council of Turkey and the Informatics and Information Security Research Center. Experts there will help determine the technical details needed to roll out digital currencies and what the benefits would be for consumers. For governments and international institutions, there's tremendous pressure to get it right.
The regulators are wrestling with very important questions of trust, interoperability, the risks associated with shifting gear in that digital direction, like risks of cyber attacks or of money laundering, of crime being committed on digital platforms.
If these challenges can be overcome, experts say the benefits are easy to see. Economies won't have to rely on the logistics of moving cash around to keep commerce running. Transactions will also be easier to track, helping authorities find tax cheats and other criminals. Paolo Montecillo, TRT World.
Now to other top stories from around the world. Tech giant Tencent is no longer among the world's 10 biggest companies by market value. Its drop has left no Chinese company on the list as Beijing's crackdown on the private sector scares away investors. Tencent's market value has fallen around $390 billion since January. Chinese regulators continue a campaign to rein in the power and dominance of the country's tech firms. The trial of 4 former Volkswagen executives on fraud charges in connection with the Dieselgate scandal has begun in Germany. Former VW boss Martin Winterkorn was initially charged alongside the 4 defendants, but his trial has been postponed on health grounds. The scandal erupted in 2015 when the German car maker admitted to manipulating millions of diesel vehicles to cheat pollution tests. And Marks & Spencer is planning to close more than half the French stores it operates with partner SFH by the end of this year. The British retailer has blamed post-Brexit trade rules for the closure of its 11 stores, citing problems with supplying them with fresh and chilled foods. The remaining 9 stores will remain open in airports and train stations. And that is the latest business and finance news for now.